And we also have a concept in economics which we call the break-even analysis, right? So what you have to know is that at break-even, right, the total annual sales, right, will be equal to the total production cost, right? So this there is the total what annual sale, right, will be equal to the total production cost. So the total product cost, right? That's what we call the break-even analysis, right? For break-even analysis, we can say that let X be the quantity at break-even, right? So let the quantity at break-even be X, or let X be the quantity at break-even, right? So at break-even, let's say we have an X quantity, so X is equal to the quantity at what break-even, right? At break-even, right? So if you have the quantity at break-even, you can see that the total annual sales becomes the selling price, right? Multiplying by the X, which is that's the cost. Or you can even say let it be Q, like any variable you want, but you just have to define it, right? Then for the total production cost, as I said, the TPC, we have a lot, right? It involves the fixed capital cost and the general expenses, right? You also have the cost. So you have the cost, that's the cost price per kg, right? So multiply by the X, which is the quantity at break even, right? Plus the what fixed cost, plus the what general what expenses, right? So this is what you call the direct what production cost, the fixed capital, the fixed cost, and the cost of production, right? So this is what you call the yes. And over here you can see that the selling price, right, will be given by the annual sales, right, divided by the annual quantity, right? So annual sales divided by what? The annual what? Quantity. Yeah, that's what you'll be having for the selling price. But sometimes the selling price will be given to you, the selling price per kg will be given to you in the question, but sometimes you have to just calculate yourself, right? Any of them, right? Then we have the cost price also per unit, right? That one is also the annual annual variable costs, right? Divided by the annual quantity, right? That one to sometimes is to be given to you in the question, the cost per the product, right? It will be given to you, maybe it's £2 per kg or £3 per kg, or it's any of them, right? So you need to know this one. So if I know all these variables, I know my selling price per kg, cost price per kg, I know my fixed cost, I know my general expenses. I can actually calculate for the what quantity that would be at what the break even point, right? So I can actually calculate for what the break even. Did you get it? Yes, the break even. Right. And the break even, we have what you also call the um and this one I have what you also call the gross profit, right? So the gross profit is um the profit with tax, right? So with tax, right? So gross profit. The gross profit is the income, right? Minus what's the expenditure, right? Profit, right? So the income is the total, right? Production seal, right? And this one is the total production cost, right? So or the TAS minus the TPC, right? So this gives me what? The profit. You get it? This gives me the profit. And I have to call the net profit. The net profit is the what? Is the profit without what? The tax. So that one is the gross profit minus what? The income tax, right? Right. The income tax can be a percentage of the gross profit. You can have maybe the gross profit, then they can say maybe it's 35% of the gross profit, so 0.35 of what? The gross profit, right? And I actually use calculate for that one. So based on this one, you can actually calculate the gross profit, the net profit, based on the analysis that you can do for what the break even, right? You can calculate all these things, right? Yeah, based on this one. And don't forget the profit is always that one. So the profits with tax, the gross profit. The profits without tax is the net profit. Yes. Yeah. Thank you.